and Nine. From a more stock perspective, how do you read it? I mean, Fairfax up 11%, popping on the back of this.
Good afternoon, Ingrid and team. Look, I'll share with you what a fellow analyst said to me this morning. He said, you know, this is like when two 80-year-olds get married. Who really cares, because they're both going to be dead soon anyway, which I don't think is particularly fair to our octogenarians, and not necessarily my sentiment, but it does give you an idea of some of the sentiment out there towards this deal. The deal itself, I'll break it down this way. The deal itself, I think, is a good one. The synergies that will be created and the ability to cross-sell and upsell advertising space to those who want it is obviously a benefit. But the questions that I have surround, first of all, does this add eyeballs, or does it just merely create a more efficient way to sell to the same eyeballs? I would suggest that it doesn't add new eyeballs, and that's a problem. And the other question that I have is, does this deal disrupt the disruptors? So the Facebook, Google, Amazons of this world who are disrupting the traditional models. Does this do anything to push back against that? Again, no, not in its current incarnation. Now, there's not to say that there's not positive things that will come from the deal, but just looking at that bigger picture, I don't think it does all that much to move the needle.
But Chris, Rudy Philip van Dijk here from F1 Arena. I agree with your underlying sentiment, but one would have to conclude that a much larger media asset, which we are creating here, would be in any shape or form, would be a much better alternative for the foreign media companies we have, essentially, because even without this merger, we already had a little bit of a flow back from advertisers back to traditional channels, because not everything on the internet is actually generating a return on investment.
I would question that initial premise, Rudy. Why? Why does it have to be a stronger player? Because it's bigger. You know, there's an old movie from the 1980s that I'm sure you'll remember that stars Danny DeVito called Other People's Money, and he delivers a famous speech at the end of that movie, and he said, a very sure way to go broke is to keep getting a bigger share of a smaller pie. And that smaller pie, I think, is represented by the advertising dollars that advertisers are willing to spend on traditional media. So, yeah, look, I see both sides of the argument, Rudy, but no, I'm sticking with the original thought that I had.
Yeah. So, I mean, Adam and Rudy, I wouldn't mind getting your views briefly as well, because I haven't had a chance to yet. We've been busy. But Adam, what's your take on the deal today and what's been announced and what it means for the broader media space as well?
Look, I think it only can be good for Fairfax, really. They've been struggling. They've had their issues, you know, as we talked about, Domain being moved on. I think that's the right step in this next evolution of this company. I think it's only good for Fairfax and their shareholders finally to get some a little bit of life, because they have been struggling with that not the online space but the traditional media space. And you know, I'm pretty comfortable with it. We don't have anything in Fairfax or Domain really, or even Channel 9.
And would this change the game for you? Would you want to invest in any of them?
I think so. You could probably start looking at some of the regional media plays. That might be something that we might see some consolidation in. But it's certainly, Nine's going to struggle. It's taking on an asset that's got earnings drag. It's going to struggle. Fairfax should do well up until ACCC announcement.
I'm not disagreeing with the general sentiment here, but I do think, to push a little bit back against Chris Conway's view here, I do think that the traditional media, the death of the traditional media has been called way too early, I think. And I do think, for example, that this combination can go to an advertiser and say, like, listen, why don't you advertise with us? We have television, we have online, we have radio, and we have print. And as far as I'm concerned, that's something that Google and Facebook can't offer. So I'm not so sure whether we have a eternally shrinking pie here, but obviously it'll be in the execution of what they can do in the next 3 years. In the short to medium term, I would say, this merger will be carried by the synergies they can achieve, and that in itself creates profit, right?
Yeah.
But beyond that, the question marks will remain. It'll be about the execution.
Well, and Chris, that's the key, isn't it, Chris, in terms of what's next as well for the media space? I mean, in terms of investments going forward, would you invest in any plays, I guess, as potential targets, as potential consolidation takes place in the broader space now?
No, Ingrid, I must profess that the media space is one that I don't particularly like as an investment case and have stayed away from. So no, I wouldn't be trying to guess at which deal might drop next, yeah.
All right, we don't have a lot of time, but I do have to talk about Macquarie because big news today, of course, other big news, overshadowed by the Fairfax 9 deal. But huge news with Nicholas Moore stepping down, retiring as chief executive. Look, Chris, this is something else that's been flagged for a while. We know that they've been sort of on a succession plan, and very much Shamara Wickramanayake has been pretty much touted as the new chief executive for a long time. She's been at the business for 30 years, safe hands, head of the asset management group, which of course is a huge part, bread and butter for Macquarie. What's your take on the news today? No surprise, I guess, to see the share price take a little bit of a dip?
No, I wouldn't have thought so, and I would equate this to what happened with BSL this time last year when their 10-year serving CEO retired. The numbers were fantastic, but the stock fell 10% on the day. And it's because investors don't like change, and let's put it right out there and let's be frank that Nicholas Moore has had or presided over a fantastic period for Macquarie. So ultimately, as I said, investors don't like change. As for Shamara, I won't try and pronounce her last name. She has a fantastic record. She's been there for 30 years. As you said, for the last 10 years has been running the engine room of profit for Macquarie. So, you know, she's a fantastic appointment, and I'm sure she will do exceptionally well. Right now, I'd be willing to sell Macquarie, though, just because it is running at about a circa 30% premium in valuation to its global peers. So you've got a couple of events here, obviously the new appointment and the fact that they didn't upgrade guidance, which I know they don't tend to do, but there was some expectation that they might. So we might see a short-term pullback, but then that will probably provide a long-term buying opportunity. So two ways you can play it.
They do tend to try to underperform, over-deliver in the majority of their results. But Adam, you had a question?
I was just, and Chris, is to you as well. I was just sort of, taking us back 10 years to Alan Moss's days. He left at Macquarie in a very, very good, in fact, at the top. We then did see a GFC, and then we saw Macquarie nearly go broke. So I'm not saying it's going to happen this time around, but CEOs do like leaving at the top. They do like leaving when things are good, and they do have the visibility to see what's going to happen in the next 2 to 3 years as well. So I think the market's right to be a little bit nervous.
And then there's the other view that they did say that when the previous CEO of CSL left, and look at what happened to the share price. I can see the 10-year comparison.
Absolutely.
But I think 10 years ago, the business model of Macquarie was shot to pieces and completely in shatters. Now, the profit growth, if you believe the analysts covering the stock, the profit growth for the next 3-5 years is pretty much secured.
And that's why the market's willing to pay a premium.
And that's why I think the story today is share price opens up 4.5% lower, and it's now 2.5% lower. It shows you that there are lots of people waiting out there with any weakness in buying Macquarie shares.
You imagine Shamara thinks very similarly to the way Nicholas Moore does. They've both been at the bank. 1987, she joined the bank. I mean, that's 30 years ago. So
I think you should say her name again because we love it when you say it.
Wickramanayake.
There you go.
There you go.
Done, absolutely.
I've been practicing this morning. All right, Chris Conway,
it'll take us weeks to practice as well.
We will leave it there with you. Appreciate your time as always on the program. Lots to get through. Thank you very much. We will take a break. When we return, though, we'll be talking quarterly.